If you are a beginner trader, how should you trade Forex properly? I'm going to share with you an 8-step plan before you click buy and sell. We are going to talk about that today, coming up next. So one common mistake a lot of beginner traders make is that they'll just flip open a chart and then they look at it for about 10 seconds and then they click right away, buy and sell. Is that the right way to trade? Wrong. Now don't get me wrong, there's a mistake that I made when I first start out that I don't want you to repeat. Because a lot of traders get confused. There's so many things that need to pay attention to. Political events, economic events, look at sentiment, the intermarket. Which one do you focus on first? Which one do you start with first? I'm going to address that right now. So the first thing that you need to look at is observe the macroeconomic environment. Meaning that you need to start your research by looking at macro events that's happening all around the world, especially the currencies that you are trading. Whether the Fed is going to increase interest rate, decrease interest rate, or maintain interest rate. Those are some of the things that you need to know. Aside from economic events, political events, you need to take note of the market sentiments. Basically, you just need to know one thing. Are investors, traders optimistic, pessimistic, or are they neutral? Basically, to sum it up, keep up with the markets, not the Kardashians. So now comes the second step. Now before I get to that, if you are a longer term trader like a swing trader, position trader, you might not want to get into a trade when there's a high impact event. So for example, if there's an NFP event, as a swing trader, you might not want to enter during the first Friday of the month. Singapore time about 8 plus PM, depending on which country you're from, but you get my point. So the second step, pick the currency pair that you want to trade. Because here's the thing, on some days, euro dollar might be more unpredictable. On some days, euro dollar might be more predictable to trade. It's safer to trade. So you need to understand which days are safer for you to trade that currency that you always trade. So how do you determine that? You determine that by looking at trading journal, looking at past, and see which day of the week do you lose money more, which day of the month do you lose money more. So you avoid those days as much as possible. And focus more on those days where you make more money. Just makes sense to do it that way. So once you pick a currency pair, here comes the third step, which is to determine whether that pair that you're trading, is it going a bullish trend, bearish trend, or consolidation. In other words, determine the trend of that pair, which direction is it heading. How do you do that? You look at the larger time frame. Okay, so let's say for example, your entry is always at H1 time frame, then you need to look at H4 to determine overall trend. Always use the bigger time frame to determine the big picture of the trend. Then your entry should be at the time frame that is lower. So in other words, step 1, step 2, step 3, this is what we call a top-down approach. So you hear this very commonly in stocks. Top-down approach meaning you look at the big picture, overall economy of the country first, the political situation of the country first. In fact, in business we learn this thing called pastel model. P, political, E, economic, S, society, T, technology, E, environment, L, legal. So that's for another video. And then right after pastel, we need to go down to company. We need to evaluate the company itself, SWOT analysis. We go with strengths, weaknesses, opportunities, threats. That's also for another video. If you want me to do more stocks videos, let me know, because I have a lot to give you, to vomit to you. So once you determine the overall trend in the larger time frame, then next step is to go to that lower time frame. Let's say for example, you're trading H4 and H1. What's the one criteria you want to make sure is fulfilled when you look at H4 and H1? For example, if in H4 the trend is going, then of course in H1 you want the trend to go that way too. What about if this happens? If H4 is going bullish, but then in H1 is going bearish, should I buy or sell? If the larger time frame is telling you to sell, lower time frame is telling you to buy, then the best thing to do is to wait until you get a higher probability trade, which means that both time frames have to be in the same direction, upwards and downwards at the same time. So assuming that both time frames are according to your trading plan, meaning both are in the same direction, both criteria is fulfilled, then the next step that you need to do is to set your target price and set your stop loss before you make a buy and sell. So my TP level and your TP level will be different depending on whether you're a day trader, swing trader, position trader, scalper, depending on your strategy too, depending on risk appetite too. Just make sure it is according to your trading plan. You never want to set your TP and stop loss target based on gut feeling. If you still don't know how to set your TP and SL target, let me know. I might make a video on that. If you're still a bit blurred about how to set your TP and SL target, it also means that you need to study your technical analysis more. You need to practice more, you need to research more, you need to backtest more, you need to forward test more. You just need to put in the work. And one very important thing is to make sure that never set your TP target and SL target too wide or too narrow. And also make sure that your TP and SL target is different for different currency pairs. Because there's no such thing as a one-size-fits-all TP and SL target for all the currency pairs. Because different currencies behave differently, they have different liquidity, different volatility. So each of the currency pairs have to have their unique set of TP targets and SL targets. And also different systems require different TP and SL targets. So once you have done that, then it comes down to step number 6, which is you need to calculate your lot size or position size, or how many volume you should trade. So of course, your position size would depend on many things. Your percentage risk per trade, it will depend on your stop loss level, value per pip, and it will also depend on price of that currency pair at that point of time. Mainly these few things, okay? So of course, if you don't know how to calculate your position size, I've done a video on that. Feel free to go check it out. So one very common mistake that a lot of traders make is that they do it the other way around. They calculate the lot size first, then they determine the stop loss level. If you're doing it this way, you're literally breaking your trading plan all the time. Because number 1, your risk management would not be consistent. And number 2, your strategy also wouldn't be consistent. So the right way to do it, determine the stop loss first, like I said, step 5. Then calculate your lot size, which is step number 6. So after you've done all of that, then you can pull the trigger, buy or sell, open a trade. Do you realize that you need to go through so many steps before click buy and sell? And a lot of traders, they skip this step because why go through the boring stuff? Step 1, step 2, step 3. Why not just click buy and sell? I want to make money right away. I'm not a scientist, I don't want to research. If you buy and sell more than you research, you are losing. You are losing big time. And of course, once the trade is closed, it doesn't just end there. One final thing you need to do is to record your trade into your trading journal. Now, I don't care whether it's a live trade, demo trade, you need to write it down. If you have to take one thing that can triple your experience in trading. You've been trading for 12 months, but with this thing, you can triple your experience to 3 years. This is the thing, most traders, when they don't have a trading journal, they just look at that trade one time. When they buy and sell, that's it. For most lazy traders, the only time they'll see that trade is when they're trading. Okay, so this one time. Alright, for people who have a trading journal, when they make that trade, they see that trade one time. When you record it down, you see it the second time because you need to screenshot it, you need to evaluate it. At the end of the week, if you are using a trading journal right, we all know that we need to review our trading week. Correct? Review our trading journal, and hence the amount of times that you see that trade. 1, 2, 3. So if you want to shortcut your trading journey, you want to fasten your learning curve, use a trading journal and use it correctly. So if you still don't know how to craft a trading journal, I've done a video on that. Feel free to check it out too. If you want more of such secrets and tips that I give to my supporters, feel free to subscribe so that you don't miss out on any tips. So with that, let me know down in the comment section below, what are the other steps that you also take in your forex trading career. So with that, I'm Karen Fu and I'll talk to you in the next episode. Bye.